In this video, I'm going to explain how I read the market before I even look for a trade. Most traders wake up, open their charts, and immediately start looking for entries. And that's a problem. If you don't know what the market is supposed to do today, you're just gambling. So before I place a single trade, I go through a top-down process. GEX tells me the bias, volume profile tells me the levels, ICT gives me the structure, Orderflow confirms the entry, and the session tells me how to play it. By the time I sit down at the open, I already know what I'm looking for, and then I just wait for it to play out. That's what this video is going to be about. The first thing I check is GEX, gamma exposure. Gamma exposure tells you how options market makers are positioned, and that positioning directly affects how price moves during the day. There are three things I'm looking at. One, the zero gamma level, also called the G flip. That's this level here at 750. If price is above the zero gamma, market makers are long gamma. They buy dips, sell the rips. The market gets choppy, stays contained, and you get mean revisions. If price is below the G flip, market makers are short gamma. They amplify moves, and the market trends. Clean and sustained moves. So just knowing where price is relative to the G flip tells me whether today is gonna be a range day or training day. Two, the put wall. We have two put walls here. Major support, the build by options positioning. When price heads down towards the put wall, that's my bearish target. My downside draw on liquidity. Three, we have the call wall. That's the same idea, opposite direction, and used as a bullish target. Market running up. Call wall is where I'm looking for price to stall or react. So before the market even opens, I already know, are we in a bullish or bearish environment, and where are the likely targets for the day. Once I have my GEX bias, I layer on volume profile. Volume profile shows me where the majority of trading activity happens. I'm looking at the current day profile here, and there are three things I look at: the value area high, the value area low, this is the value area high, this is the value area low, and the point of control. The value area high is where roughly 70% of the day's volume is traded. Value area high is the top, and the value area low is the bottom. Price above value area high is in premium and is extended above value. In a bullish GEX environment, that's fine, but I know we're stretched. Price below value area low, we're in discount. In a bearish GEX environment, that confirms the move. We broke down out of value and we have room to go. Price inside value. This is inside the value. If you're trading inside the range, expect choppier conditions. Here I'm more selective also. I want to see price move towards the value area high or value area low before I even think about entries. The POC is the most traded price level of the day, acts as a magnet and as a rejection. I also stack multiple session profiles on the chart. Previous week, the previous day, overnight, and the current session. Each one gives me a different layer of context for where value has been across time frames. If you look at this indicator here, we see that we traded below the value area on the previous daily, overnight, and the weekly. So that is suggesting that we will go lower for the day, and I'm only looking to take shorts. So now I have GEX bias, GEX targets, and I know exactly where price is sitting relative to value. That's the structure. Now I know the bias and I know the levels. The next thing I look at is market structure, and for that I use ICT concepts. ICT stands for Inner Circle Trader. It's a framework for reading how price actually moves through structure, breaks, imbalances, and liquidity sweeps. Three things I use from it. A break of structure. This is when price breaks a significant high or low. It tells me the market has shifted direction. A bearish break of structure confirms we're moving lower, like you see here. We broke the low on the 15-minute and we moved lower. Imbalances. When price moves fast and hard in one direction, it leaves a gap in the candles. Price almost always comes back to fill it. That retest is where I look for my entry, like we had here. We had a 5-minute imbalance, and we tapped it here, and then boom, we moved lower. And I also look for SMTs, a divergence between NQ and ES. When one makes a new high or low and the other doesn't confirm it, the move is weak. It's one of the best early signals that the rejection is coming. We had two SMTs here. The first one was here. We took the high on ES, but on NQ we didn't. The second one was here. The same thing. The last thing I look at before I take an entry is the Orderflow. I'll use MotiveWave for this, specifically the CVD and Footprint. CVD stands for cumulative volume delta. It shows me whether buying or selling pressure is actually behind the move. If price is pushing up but CVD is dropping, buyers aren't in control, and that's a red flag. On Footprints, shows me the volume traded at each price level. Bid versus ask. I can see exactly where absorption is happening, where delta flips, where the big players are stepping in. If price is at the key level and the Orderflow confirms what I'm seeing, that's extra confidence. That's when I pull the trigger. I'm going to dedicate a full video to Orderflow on its own because it deserves way more time than I can give it here. This is MotiveWave and the templates I use. I trade two sessions, New York AM and the New York PM. They behave differently and I treat them differently. On the New York Open, real volume comes in. This is where the big moves happen and I'm more aggressive. Stop loss is also wider because it's more volatile and it's most of the times around 30 points. New York PM has lower volatility, institutional flies already happened. Moves are smaller and tighter, smaller stops. I have mine around 15 points and I'm also more patient and take setups that are extremely clean. GEX helps here too. Trending days below the G flip tend to keep going into PM. Choppy days above it tend to fade the AM move by the afternoon. That context changes how aggressive I am later in the day. Let me show you how this all comes together. I'm going to walk you through the trade I took on Friday, like you see on the chart. This was in the New York AM session. Pre-market, we had the GEX here. We were trading below the G flip, so that's suggesting we were bearish and in a trending environment. I'm not looking for longs today, so on the volume profile, price is sitting below the value area on all the sessions, and we are already in discount and breaking down. That confirms GEX bias. Drawn liquidity is the previous daily low at 29445. That's my target for the day, and we also had a major put wall here. So that was also a strong target. Okay, bias is set. Now I wait for the structure to give me an inch. Price pushes up here, rejects the current value area twice, and then boom, moves lower. We made an SMT, broke down here, another break of structure, and then we created a 5-minute imbalance, retest on the value area low from the current session, and the 5-minute imbalance, and then we moved lower. We also had the previous weekly value area high here, so that's also a strong level to take trades from. I also checked the order flow here on MotiveWave. As you can see here, the CVD was dropping, so there's real selling pressure. So after I saw that, I waited for price to retrace back into that imbalance and the previous weekly value area low we had there, and that was my entry. GEX gave the bias, volume profile gave the structure, ICT gave the entry trigger, Orderflow confirmed it. That's the full process. That's how I read the market before I place a single trade. GEX for bias and targets, volume profile for levels and structure, ICT for market structure and entries, Orderflow to confirm, session contacts for how I adjust. Next video I'm going deeper on the specific levels I trade and how I find my entries. And after that, a full breakdown of how I use CVD and Footprint to confirm entries. that one's going to be good. If this was useful, subscribe, and I'll see you in the next one. Peace.